For most of us working hard to pay the mortgage, it can be hard to watch the banks making mega profits of billions of dollars. But now the banks doing the wrong thing by struggling customers can be named and shamed under a new code of practice. To get more on this, we have Zain, finance educator and founder of Zep Finance. All right, Zain, what was the catalyst for this new code of practice for the banks?
Well, I mean, the main catalyst that started it was actually the Haynes Royal Commission, which was the Royal Commission into the code of, I guess, misconduct in the banking industry and financial services industry. And then from there, we've had the industry bodies, or regulators, should I say, ASIC and the Australian Banking Association, then go forward and recommend these changes. The last recommendation or the last set of these guidelines was actually in October 2021.
Now, there's going to be, as I said, the naming and shaming of banks not doing the right thing. So what sort of things will get them in strife?
Certainly not dealing with, I guess, financial hardship correctly. The naming and the shaming is not a law. It's about building customer confidence and like a good representation and trust. So charging excessive fees, not being inclusive. We're talking about lately we've had ANZ has been named and shamed last year for charging dead customers fees and not giving it back quick enough. We've seen Westpac named and shamed for closing down the branch at Tennant Creek and not having, I guess, consulting the community and taking that asset away. And then we've also seen multiple lenders lately being named and shamed about breaches for anti-money laundering when they're taking deposits and things like that.
Now, for customers, what are the things we should be aware of with this new code of practice that will help us?
I mean, the big thing is simplifying the hardship process. That has been amazing because unfortunately, I have seen a lot of customers in the last 12 months who have not had a great outcome when they are seeking hardship. There's been a lot of changes to what is a small business, and I believe they're saying that 10,000 extra small businesses are now covered under this code of conduct. We're seeing the benefit for being a co-borrower. So in the past, you could potentially jump on with a family member, take out a loan, but if you're not getting a benefit from that, then now it might not be able to proceed. And luckily, some of these actual guidelines have already been brought in. And I guess there's been some really big changes for guarantors. So who can be a guarantor and what does that mean? And also extra requirements for the banks to make sure that it is suitable for you.
Now, has this code of practice covered all the issues so far, or do you reckon the banks still need to do a bit more to support customers?
Look, the banks could always do a little bit more to support customers. It's certainly come a long way to defining what they need to do in a few areas, like that hardship one is amazing. Some areas that I still think it's lacking is that the bank's responsibility when we're talking about, I guess, certain things of closing branches down, or even when we're talking about what makes hardship easier. Yes, they brought in guidelines, but I'd like to see that there was a set policy for everyone. Of course, it is just a code of practice. So it doesn't mean that they can get in, they can get in a lot of trouble, but they've still got to abide by that practice and implement it into their actual branches, which is something.
Zain from Zep Finance, thanks for your insight this afternoon.
Thank you very much. Really appreciate it, Will.